Battery in this, babe? Hey, everybody. Chuck Barone here. It is Happy Friday, June the 7th, 2024. You see this day of madness today, guys? It's the Roaring Kitty Day. So Roaring Kitty comes out, gets like freaking 700,000 viewers to his live stream. GameStop tanks 40%. Oh boy, great time to be a buyer of GameStop. Hope you guys aren't it's fun to watch that stuff from afar. Don't go any freaking where near that stuff, guys. The moves are too dramatic. You got to be literally sitting in front of your computer. Don't play with those meme stocks. All right, so let's talk about these freaking markets. But before I do, let me take a second. Welcome, everybody. Look at all the fans we got going the Dirty Dozen today. Salty, my man, Attila, Wolfon, Sergeant Slaughter, Ghazi, Zoot, Gary. We got a whole our regular suspects, the usual 12 who get up here, start the conversation going before the show even starts. Love you guys and appreciate what you do. All right, so let's talk about crazy ass markets today. We knew we were going to get this jobs report today. And what a freaking shocker it was, guys. Huge spike. Really, really, really much, much more than they thought they were going to get. Literally blew up all the optimism for rate cuts on the markets. And pretty much everything across the board was down, 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 down today. The Dow Jones falls 87 points, 38,798. The NASDAQ falls 40 points, 17,133. The S&P falls 6 points, 53, what the hell, I can't even read my own damn writing here, 53.46 on the S&P 500. So we're going to get no closing records to finish the week on the stock market. Just big crashing sounds. The bond market was even worse. You see these numbers? So the bond market had been rallying. Remember, I was going, wow, who's buying all these bonds? Well, whoever bought them was selling today. The 10-year prices fall. The yield up 15 basis points, 4.43%. Boom, here comes the 10-year rocking back up. The 2-year fared even worse. Prices down. It was up 17 basis points, 4.89%. So all the gains they made over all the optimism and all the stuff, ooh, bad news is good, yay, gave it all back today. What a crap day for the bond market. The dollar, the only bright spot in the markets today, up 85 basis points on the index, 104.94, was threatening to break through and go under 104 yesterday. I was worried about it. Today, threatening to go back up, break through 105 on the way up. Go, go, go dollar. Gold and silver today, however, not a good day. We got the double whammy today. I'll talk about that in a little bit. Gold falls $83.40. Ugh, that's not fun. $2,388.50 for an ounce of gold. Silver falls $2.14, $29.13 for an ounce of silver. The silver, I'm going to finish the week under 30 bucks. I do not like that. Big losses today in gold and silver. And like I said, we'll talk about that. I got a little blurb on that later in the show. Oil today falls 18 cents. Not much of a move on the oil patch. $75.37 for a barrel of West Texas Intermediate. Pretty much right where we expect it to be. Bitcoin takes a hit today, down $1,419. 69,264 for Bitcoin. So there you see it. It's one of those red days where every single freaking thing on the market was red, down, down, down. Tough day to be an investor. The job report just blew everything up. Boom. The best, it was like a giant friggin' fly landing in Powell's soup and doing the backstroke. I mean, it was just not a good day for these markets. Let's talk about why. Jobs report, the big news we were waiting for today. Job report, sizzling hot, boom, 272,000 jobs. Blowout. They were economists were expecting 175,000. So they almost beat the number by 100,000 freaking jobs. Last month was revised higher. The unemployment did tick up. Unemployment rate now at 4%, and that breaks a streak of 27 consecutive months with unemployment under 4%. That's going to be an interesting one to watch. There's the little bit of a good news the Fed can grasp onto. Unemployment ticking a little bit higher, but these jobs just super hot, super hot. The average hourly wage now rises to, get this, guys, $34.91 per hour. That's 4.1% higher than it was a year ago. So wages continuing to still go up. Now it's going to be interesting to see. They didn't really explain how they come up with this $34.91 number. Is that just straight hourly pay? Is that hourly pay with benefits? They didn't kind of quite expect that. I don't really think that everybody across the country, the average wage is almost $35 an hour. I don't think that's true. Jobs led by the usual suspects: healthcare, hospitality, and government jobs. So basically what we have here are the two of the lowest paying groups, healthcare and hospitality. When they say healthcare, they're not talking about doctors, okay? They're talking about orderlies and people who clean bedpans. Hospitality, we're not talking about casino managers or hotel managers. They're talking about front desk clerks and busboys. And the government, well, they're always hiring. So much, though, for a week of foreshadowing. I got to admit, I was expecting this job report to be shitty. I thought it was going to be down. I thought it was going to be terrible. Guess what? All the foreshadowing, ADP with their huge miss, right? You had the rising unemployment claims yesterday. You had all of this stuff foreshadowing this jobs report today. Well, guess what? The jobs report wasn't going to cooperate. So now what happens, guys? The market the market was pricing in all of these. Now they're back to cutting rates in September. We're going to get 2 rate cuts this year. The optimism was just blooming like a beautiful spring rose. Guess what? All gone. Now we're back to wait and see. Wait and see. They're going to be looking for new data. It's basically a reset, a start over. And all of the good news that they felt like they were going to get rates cut, all that goes away. Bye-bye. And I'm sticking to my guns, guys. I really believe that if we're lucky this year, we're going to get 1 rate cut in December. It is not the habit of the Federal Reserve to raise or lower rates during a presidential election. It did happen one time. I think that was the 2008 election, McCain and Obama, where we had the big kablooey in September, and they had to adjust rates. The election wasn't until November, so they had to get in there. But ordinarily, this is not something they're going to do. And with Trump running and rate cuts on the table, if rates were going to increase, Trump would be all for that because that would slow the economy. Rate cuts, he's totally against, and he's going to be up the Fed's butt if there's even whispers that they're going to cut rates. All right, moving along. I was reading this article today, very interesting stuff. So the S&P 500, which is the index I watch most closely because it's the broadest index, obviously 500 stocks. 3 companies make up 20% of the results because of the way they weight these companies. Freaking silliness. You got obviously poorly weighted, but it's Microsoft, Apple, and Nvidia. Those 3 companies, 20% of the S&P 500. Why don't they call it the S&P 50 then instead of it's misleading. And the way they're weighting it, I don't know if it's exactly accurate the way they're showing the results, right? Listen to this, guys. There's now across the board in the worldwide, 7,000 zombie corporations worldwide, well over 2,000 zombie corporations here in the United States. All of these companies are publicly traded companies, okay? So there's stock out there on all of these companies worldwide. Basically, these are companies that are so burdened with low rate debt. That's all they can barely do is make their debt payments. You have rates higher, and commercial debt is different than your mortgage. A lot of these loans, billions and billions of these loans, have to be refinanced at much higher rates, something these zombie companies cannot accommodate. Okay, so these companies are, if any small problem or even a big problem, 2,000 freaking companies, and with rates so much higher, billions coming due. Guess what, guys? We're going to start watching these zombie companies start to fall like dominoes. Going to be interesting to see, because they didn't give me very many names in there of who these companies are. I guess we could do a little bit of research, but fascinating stuff. More than 2,000 publicly traded companies. Guess what, guys? You see this crazy ass shit? Fees are now coming if you want to pay for something in cash. What the hell? There was a story that said the guy was at Yankee Stadium. He wanted to buy some stuff at the concession stand. They told him, sorry, we don't take cash. They directed him, listen to this, it's a reverse ATM machine. You put cash in, and a loaded debit card comes out that you can spend then to buy hot dogs and pennants or whatever you want. Charging fees now. They charge, of course, your bank's going to charge you for out of network bullshit, right? Got to have to put cash in to buy an ATM card to spend your money. Man, I thought this Canada thing yesterday, where they're going to try to preempt crimes now, but this is madness, guys. These friggin' knuckleheads who run the country sit up at night thinking this crap up. It's frightening, guys. We really somehow or another always seem to get the dumbest, dimmest, lamest, worst possible people in these big important spots. Just a freaking disaster. You're gonna have to pay fees to spend cash. Banks, Moody's coming out today, downgrading regional banks. So now we're starting with that. Banks, Moody's drop ratings on several regional banks, including Old National, WaFd, First Merchant, Fulton Financial, and more, a whole bunch of groups. All of these companies have massive exposure to commercial real estate. I don't know what their exposure is to zombie companies or cash ATM reverse machines, but banks starting now, Moody's, S&P starting to be, they're not going to mask over this big problem with regional banks anymore. They're going to start downgrading these banks. If you have your money in one of these smaller regional banks, be careful, guys. Make sure you stay under that FDIC limit. Make sure they have FDIC insurance, first of all. Make sure you stay under that limit. So if there's any problem, you can be made whole. Won't be long. We know what the end game in this regional bank thing is. We know what the end game is in this commercial real estate collapse. You're going to start seeing these banks fall down. Boom, boom, boom. Get ready, guys, okay? Insurance companies. Man, have you seen this stuff? Insurance companies now flying. They're looking for any reason they can to cancel homeowners policies. They don't want to do homeowners anymore, especially in areas that are prone to these crazier storms we've been getting. Places like Florida, places along the East Coast, along the Gulf Coast, tornado territory. They don't want that anymore. If you're in a kind of tropical place, they don't want that anymore. They don't want wildfire places. They're being very, very selective. Here's what they're doing, guys. They are literally flying drones, right, over your house, around your house, to check out your roof, to check out your plants and shrubberies, to check out if you have a trampoline in your backyard. Are you keeping your place nice and neat? They're looking for any excuse they can to drop these policies, guys. They don't want to insure homeowners anymore. Get ready. If you're in one of these storm-prone areas, be very, very careful. You probably already seen the disgusting mammoth price increases. In some places in Florida, a homeowner's policy is more than $2,000 freaking dollars a month. It's way more than your mortgage. It's bananas, guys. Insurance companies, they're not, they're not benevolent. societies. They're in there to make a profit. They're in there to protect their reserves. They're going to blow out the losers. So if you're in one of these areas, be particularly careful and make sure they don't quietly drop your policy where you're stuck and you don't even know it and you have no homeowners insurance. Gold. Let's talk about gold today. You saw the big number. God damn, it was terrible. Gold down $83 and change. And that's a big, big move. Well, here's why. First of all, the jobs report came, and that really moved the dollar up. The dollar up almost a whole percentage point on the index. So we knew gold was coming down today with the dollar rallying up like that, right? Remember, guys, the gold and silver on one side of the teeter-totter, the dollar on the other. So the dollar goes up, gold and silver go down. The dollar goes down, gold and silver go up, right? So we knew the dollar was going to rise when we saw this jobs report. It did rise pretty spectacularly, but the big part of this equation, China has been literally been buying gold by the ton. Chinese central bank been buying tons and tons and tons of gold. Well, guess what? Now they're cutting back on those. They have so many other problems to deal with. So they announced they're cutting back on gold purchases. Between the stronger dollar and China's going to slow down on gold purchases. Now we'll see what China really does. They're not known for leading the market. You know, they're going to throw a head fake here. They would like to pay less for the gold they're buying, and $83 an ounce is a pretty substantial amount less to pay. So I'm guessing that's what led to this announcement by the Chinese today. So there you have the reason for gold and silver in the tank today. But guys, I'm telling you right now, I personally, for me, it's silver. I love silver because not only is it desirable as to collect as a hedge against the dollar, right? And a hedge against inflation. Number two reason I like it is it's super easy to buy it. You know, when you're talking $30 an ounce, it's not something that's going to break the bank like $2,388 is for gold. Most people can scrounge up $100 and buy 3 ounces of silver. Most people can't scrounge up, $2,400 to buy 1 ounce of gold. So I think silver's a little bit easier to own, a little bit easier to buy, especially for the schmuckatellis who don't have millions of dollars to invest. Also, silver is used much more in industrial stuff. You know, these photovoltaic panels for solar, a lot of uses industrially for silver. They said that all the gold that's ever been mined, that was ever in existence, is still in existence in the form of jewelry or King Tut's coffin or whatever. It's still, all of it is still around. Silver, because of its industrial use, the supply continually shrinking, and in the uses for silver continually growing, you're going to see a giant bull market in silver before long, guys. Anyway, that's it for the day. Hey, Donna. Miggy, appreciate everybody being here today. It's a wrap for the week. A crazy ass finish to a crazy ass week, guys. It was looking sweet, like we were going to get rate cuts. And I got to say, being a mortgage guy, I'm number one guy pulling for rate cuts. Not going to happen. Big reversals on the very end of the week. Let's take this weekend and go get away from this stuff for a while. Have a little bit of fun. Relax with the family. Be careful if you're in the West. It's 111 here in Vegas today. Freaking crazy, this heat dome. So if you're going to be outside and you're out west, be careful. Keep yourself hydrated. Find some shade. Don't go too vigorous. Enjoy the time with your friends and your family, people you care about. I myself, I'm going to be heading up to Reno. I got a convention up there this week. So Monday and Tuesday, I'll probably be able to get a video out on Monday. It's going to be a weird one, though, because I don't think I'm going to be able to lug all this stuff up there with me. But I'll get something out on Monday to start the week. Tuesday is going to be a travel day, so that's going to be a little bit harder for me, but I'll try to get something out on Tuesday. In the meantime, guys, go forth. Have an awesome weekend. Know your host. Know I loves you guys, every single one of you. And we will see you guys again next week. Great weekend, everybody. Take care. Thanks.